Hi, I'm Whack.
And I'm Pat, and thanks for joining us for another episode of the Weekly Orbit for Friday, March 28th. We're almost at the end of March, thank God. This has been a horrible month for crypto and markets, but sorry about last week, folks. Our schedules just didn't pan out. We couldn't get an episode to you, but we're back this week. I'm excited to be back. And Whack, how have you been the last week or two? I haven't seen you either.
Yeah, I've been okay, thanks. Just plodding along, doing my thing. We've been sick in my family, and it finally hit me, so
Yeah.
that was fun. It was my turn, but other than that, I've been okay.
Yeah, I had something a couple of weeks ago that was really nasty. It was like, go
I
ahead.
had a fever of 103.
Oh, that's pretty
Yeah,
high.
it was really high, yeah.
There's something been going around because I got something and it was weird because it was probably, you get a cold, you're like, oh man, I'm getting something. And the first couple of days are probably the worst. And then you slowly start getting better by, day 3, 4, 5. Well, it was until like day 5 until I woke up in the middle of the night with just sweat. I was soaked. I'm like, what is going on here? This is weird.
Yeah.
But over that now. So, sorry, last week I was doing that movie, that Christmas movie, and it's coming to a Hallmark channel near you in November, December. And it's kind of funny. They do some time travel in it. Like a Christmas comet comes by and transports this girl from 1905 to 2025. And, it's your typical Hallmark good feeling movie, but it's been a great experience and good crew, the good director, and the way they do it is usually the director, the first assistant director, and the director of photography. They pick, like, the director will pick those two people, that triangle, and then everyone else is like local. So like the local crew, a lot of them I've seen before, but the guys, they're all from out of town, the director and their cohorts. And they're really great to work with and fun. So yeah, it's been good people.
Nice.
And so should we talk you want to talk some markets here?
Do we have to? Yeah, okay, let's do it.
Well, yeah, let's do that because that's what we do here. We bring you the good and the bad, but it's actually not bad. I was looking at the 2-week chart here on Ethereum. Right now we're at $2,009. Which is, the last time we talked was 2 weeks ago. It's up 5.4%. So Ethereum, it seems to have leveled out a little bit around this $2,000 mark.
Yeah.
Which is good. One thing that's, was kind of a bummer here is I was looking at the Ethereum ETF flows, and it's all been negative. This is, you could see on that chart, we're going from March 10th through March 26th. And except for one day, on the 24th, we had 0 inflows or 0 outflows, but everything else has been negative. It's been pretty
Click
bad.
on the Bitcoin one.
Yeah, let's do that.
Because
they've had positive inflows, right?
No,
Bitcoin?
like smaller, some, but like more, quite a lot of negative there as well. I guess it's just lagging. The ETH is lagging a little bit, but there was a lot of outflows there as well. They've got a couple of weeks of inflows now, but they had a lot of big outflows, like 1 billion plus day outflows. So that was still happening there. But it looks like what's happening with the ETF flows is that people are unwinding their not the carry trade, the basis trade, it looks like. So some of that is getting closed up, and that's why there's outflows from the ETF, because the way that you do it, like, you buy a spot, which is buying the ETF, and then you short the futures. So the record shorts for ETH, like the biggest in its history. So it looks like some of that is getting closed up now, but don't know for sure. But it seems that's what the case is looking like from some of the commentators that I've listened to. That's the message that they're kind of putting forward. But
so
yeah,
you're saying that those who were shorting, they've made their money and now they're just closing out the position because they're like,
maybe,
okay,
yeah,
at $3,500 when ETH was like 3,500, they put in some shorts and now we're at 2,000.
It's not quite that though. It's a basis trade, right? So what happens is that they are long and short at the same time. So that cancels itself out. And then what they're doing is they're getting the funding rate and they're pocketing that. So you get money to be short on the market, and that is the money that they're keeping because they're going long and short at the same time. So then it's called a delta neutral hedge.
Okay.
I don't understand the full technicalities of it. It's not something that I've ever done, obviously, but from what I understand, that's how it works. So you are long and short at the same time, balance that out, becomes neutral, and then you keep the funding fees that you got on top. And at times that can be up to 20% a year, which when you compare that to annualized, right, like 20%. If you compare that to TradFi, money that comes in, that's literally people working for like 0.25% or 0.5% or whatever they can kind of eke out. So this has been incredibly profitable for a whole lot of people. But I think from what I've heard is that this trade is kind of ending right now. So that could be the reason why some of those like ETH outflows are happening. And that could be the reason why we got those huge BTC outflows a couple of weeks ago, like, billion plus dollars a day. So something to keep in mind, like the markets, the prices themselves, like you said, is ETH has been up a little bit over the last 2 weeks, which is decent. It hit 2100 and it's kind of retraced a tiny bit from there. But overall, like, there's talk that's starting to come in now that, the bottom is in. Whether that's true or not, I guess we'll find out in time. But right now it's looking like, people are slowly trying to get some hope again. There's an interesting chart that's been going around for a while, actually. It started out of Global Macro Investor, GMI group, which is Raoul Pal's group. And he has this idea that crypto prices are correlated with global money supply on a lagging basis. And global money supply started going on the, like, I think 8 or 10 week lagging basis. And about 6 or 7 weeks ago, the global money supply started going up. So he thinks it correlates with crypto prices starting to move up in April. So it looks like people are just focusing on this tariffs day on April 2nd and seeing what the outcome of that is going to be. And then the market might pick a direction after that.
Okay, so the basis trade looks like it's closed, and moving on to RPL.
Not closed, maybe showing signs of closing, not closed.
Showing signs.
Yeah.
Well, in general, the market is just, the stock market as well is just so volatile with all the craziness. Yesterday, the Trump administration announced they're going to slap a 25% tariff on all imported cars, which is nuts, but also it's really difficult because it's not like you're importing soybeans. When you import a car, there's thousands of parts in it that have gone over the border several times in some cases, and how do you even? It's got to be really hard to figure out how much of this car is actually made in America, and perhaps it's assembled here, but it's got parts from all around the world, and what if it's just a clusterfuck? I mean, we've talked about that before. So why don't we move on to Rocket Pool? It's right now RPL is $5.35. On the last couple of weeks, we are pretty flat, 0.1% in the last 2 weeks. So pretty flat.
Yeah.
Ratio's gone down a little bit. ETH has gone up 5%, and our RPLs remain the same. So we'll keep an eye on that. Let's take a look at some stats. The deposit pool. This last couple of weeks, let's look at the daily. And we had some decent days there. You had March 26th, 1,247 ETH. On March 25th, 444. On March 23rd, 905. And so it's picking up a little bit. It seems like it coincides with our ETH discount, which right now, I just had it. Where'd it go? There it is. Right now, our ETH, we're at 0.012% discount, which basically means it's trading at peg.
On peg. Yeah.
Yeah. So it seems like there's a little bit of correlation here. So now that on the secondary markets, you can't really get a deal, people are minting their rETH directly through the protocol. Your thoughts?
Yeah, that's exactly right. So this is the thesis, right? Is that you stay at peg until you have either more people selling, in which case you have a discount, or until you have more node operator supply than the deposit pool can handle, in which case then you'll start getting less of the node operator demand than the protocol needs, in which case you will start getting a full deposit pool and then going over that, like we've had the premium for such a long time because we didn't have node operators. So it's really rare that we exist kind of in this in this sweet spot where there's not a discount, there's not a premium, and also the deposit pool's in a healthy state. Like, it's really rare for us to be in that state, right? Because it kind of oscillates between either discount off peg or deposit pool is full and a premium. And I don't think we're going to be in a deposit pool is full and premium environment again for a very, very, very long time, just because we have the node operator supply. That, I think, that is a solved issue. I think that's a solved issue. And the reason why I'm saying that is because with Saturn 1, with the same validators we have right now, with the same node operators we have right now, they don't have to add a single new ETH, and we'll get 1.5 million rETH worth of availability that'll come through. So, we're not going to be node operator constrained. So forget about that. Now, the thing with the discount is it's a really, really sweet spot where things start coming into the deposit pool. And that's pretty much right now, when we're right at peg. Now, as soon as we start getting off peg a little bit, then of course people will go to the secondary market, right? It's just cheaper. Like, why would they pay more for a product when they can get it for cheaper in the secondary market? The problem that happens, Pat, is that there's no way for people to redeem their rETH at market rate, right? So there's a queue of node operators. That means that rETH, there's no availability to burn your rETH in deposit pool. So it goes onto the secondary market. Now, when it goes onto the secondary market, that causes a slight depeg. Then there might be someone out there who gets a little bit worried, saying, oh, this depeg is going to get worse. So then they sell into the depeg. Then more people sell into the depeg. And before you know it, you've got a 1% depeg, or a 0.5% depeg. Now, at that point, it becomes profitable for node operators to say, hey, I'm going to exit and take that exit arb. So then they will exit and arb it, and then it'll go back to peg, which is the state that we're at right now, because Thomas basically exited a bunch of validators. Meek, another node operator, big node operator with Rocket Pool, exited all of his validators as well, all of their validators. And that's why we're at this point now. The problem is every time we go through this cycle, which is once every few weeks or so, we're losing a few hundred node operators each time. Sorry, not a few hundred node operators, a few hundred validators each time. And that's not good. So we have a system that we're trying to put into place. So instead of, when there is a deposit into the deposit pool, instead of going to the validators who are waiting first, it will actually start filling up the buffer first. So that is up to 5,000 ETH, which is not an insignificant amount, so it will add hopefully some protection against the depeg happening right away, because you could just go to the protocol and burn your rETH and get it back at rate. So that helps. It will slow down new node operators coming online a little bit, because they'll have to wait for that buffer to be full before new validators start coming online. The thing is that it will also slow down node operators leaving or being incentivized to leave pretty much. The main thing that we need is protocol level exits, and that won't happen until Saturn 2 basically. So it might take a while before we have protocol level exits. So that is when a rETH holder, say they have 10,000 rETH, they will come to Rocket Pool and they'll say, hey, I want to exit my validators. Sorry, I want to burn my rETH. I want 10,000 rETH worth of ETH back. And then the protocol will say, wait 1 week and you can get it, blah, blah, blah. And then behind the scenes, what we'll do is, we'll kick out certain node operators, according to a set rigid system. If you are the worst performing one, you're the one who's going to go first, kind of thing. Well, I don't know how that's going to work yet. We don't have the design for it yet. But then that person would leave. And when that person left, then the validators, the ETH that was in their validators, would then go to the person requesting the exit. So that would, I think, make it a bit more graceful. It would stop this loop. And also, I think what happens is, if people know that they can exit at peg, they won't worry about there being a depeg on the market. In fact, what will happen is they will actually buy the depeg on the market and then go to the protocol and say, hey, look, I want to redeem this at peg level. So that would actually act as a nice protection from depegs, even if people trusted the process. So we really need that. We desperately need that, because until we have that, there's a chance that we keep going through this cycle every 3 or 4 weeks. But one thing that, we've seen it happen 3 times now, where we've depegged, between 0.5% and 1% and then come back to peg. And what's happening, there's a few people in the community who have kind of figured this out, that this is happening, and they're opening long rETH positions on looping markets when there is a significant discount, and they're capturing 2 or 3% yield every time they do that. So there are ways that we in the community can kind of like benefit as well. It's a little bit risky. Like, if the DPEG gets more, and depending on how many times you loop it, you could get liquidated, obviously.
Yeah.
You don't want that to happen.
Yeah.
But the thing is, the more people see that that's possible, then that would actually prevent the DPEG from getting too bad as well. So there are a few like natural incentives in place to stop the DPEG from getting too bad, and then we just need those protocol level ones to stop, because you can see, right, that there's ETH coming into the protocol. It's just sadly a little bit more than the ETH. Sorry, a little bit less than the ETH leaving the protocol at times. So that's why we're kind of shrinking a little bit.
Gotcha. So it would be, is that, if I recall, you said Saturn II will have that solution put in place?
Hopefully, we should
maybe?
have that in Saturn II, yeah. But I don't think we've voted on anything yet, and there's no architecture for it yet. So I don't know. But it's something that we desperately need. So hopefully it can get pushed up the priority list.
Sure. Okay, let's take a look at some news. We haven't talked about Lido in a while. CSM version 2. They've been making waves about. There's some issues with V1 that they found, and one was that some of the professional node operators were also, I guess, using CSM to earn more yield, and that's not something they want. So it's kind of weird, because now they were pushing CSM as this permissionless way to expand node operators to just the general public. And V2, to me, Wack, it sounds like it's going to be almost like a permissioned segment. So what's going on here? Is this going back on what they said about being permissionless, but now they're going to whitelist because they want to make sure certain people aren't double duty? What's up with CSM version 2?
They're going to have two queues, and one queue will get slightly preferential treatment, and the other one will get slightly less preferential treatment. And they basically are doing soft permissioning for the preferential queue. It's funny. Like they are a permissioned protocol who have set up a permissionless module that is now going to have a permissioned element involved. So that's the thing is, like, Sybil attacks are a real thing in crypto, right?
Yeah.
Like, there is no way to prove that someone who is saying there are two people are actually two people and not just one person. And just like that, there's no way to say that 1,000 people are 1,000 people and not just one person. But it's a known attack in crypto that this is a real thing, and there's ways of suspecting that you are being Sybil attacked, but the reality is that it's really, really, really hard to detect, because people can hide themselves really well. Now, Lido here are basically saying that some people have taken more of a share of the keys than they should have, and we need to fix this, which makes sense. But the reason why they're doing this is because they always want to have a cap on the number of validators that there will be in the permissionless module. So, for example, each validator will only have 10 validators, or maybe 20 validators, or 50 validators. And the reason why the consequence of that then becomes that a person who hits that cap at 50 and wants more validators, well, they pretend that they're someone else and get 50 more, and then pretend they're someone else and get 50 more. Mm-hmm. And this is what they're trying to prevent from happening. So it's good that they're trying to prevent this Sybil attack from happening, so the average Joe can get their validators. The problem is that how can they call it permissionless then, right? Like you can't really, like,
permissionless module.
Mm-hmm. Yeah, exactly. And they're trying to figure out ways. I think that there's shortcomings, but as long as they can market their stance well enough, then people will be like, yeah, this is good enough, which we've seen over and over again in crypto. And we're going to come back to that later as well, when we're talking about another thing. But yeah, they're really hyping up V1, and now they're going to V2, and they're starting the hype machine for V2. Lido really good at that, right? Like, they're really good at pushing their achievements and getting people to say just how good Lido is. So
we were talking about how do we get more rETH and how do we get more TVL, and we came up with as a community to go out, have individual community members reach out to protocols and say, hey, look at how great Rocket Pool is and all the great features. Well, now we have a standard pitch deck that Sleety has put together. And I think it's cool that with Sleety doing all of our graphics, you're getting a nice consistent form and look to it. And this is, of course, it's beautiful. It's about 10 slides that go through all the great things about Rocket Pool that we can use to advertise. So I was going through this. Is there? We were just talking about permissioned, and on this slide, am I reading this right? It's because it says Rocket Pool rETH is 100% permission node. Is that supposed to be permissionless?
Yeah, permissionless.
Yeah, because then there's Lido as 5% permission node. I said, well, actually, that is right. But maybe we need a little edit there for Sleety that it should be permissionless on the Rocket Pool side of things. So what do you think about this? And this is a step in the right direction for getting that program off the ground.
Yeah, it's beautiful. Like, this is part of the STAR initiative, which is the search, target, blah blah blah. Is to get people in different DAOs and places to mint rETH, which of course we really want them to do. We need them to do. So the STAR initiative, the point of it is that people are singing from the same hymn sheet, like when they're going to different places, and the Signal XU and others kind of work together to get Sleety to make this pitch deck, which is awesome. Like you said, having consistent branding is so important, and this is a step in that really, really good direction. I covered this on Rocket Fuel a few days ago and just talked about how the content is good, and it really gives. It's not overbearing content. It really gives a person who's pitching to the particular DAO, the community, a chance to add their own experiences and their own opinions and stuff. So it's flexible too. So it's really, really great content. I think that hopefully, we'll start seeing some fruits of this. It just takes time, sadly, to, find the different DAOs and build relationships with them and start talking to people there and, finding the right people to talk to, finding the decision makers who actually, what their governance structure is, how they might be able to do this. All of these steps sadly take time. So I feel like it's one of those situations where it'll be slowly, and then all at once, hopefully we'll start blossoming with some of these relationships. But if you follow along, with the thread for the STAR program, it's in the GMC Discord, so you can go and have a look at it there. But you can see that people are talking to loads of different protocols already, and some of them have got thousands and thousands of ETH that hopefully they can use to put towards Rocket Pool.
I think that I remember we're going to talk about this a little bit about decentralization, where it seems like retail, it's kind of a secondary thought for retail. But when I'm thinking about institutions coming into crypto, that stuff, I wonder if they're going to take a different view of it than retail has. Like, for example, Rocket Pool's whole thing is decentralization, permissionless, all that. It for retail guy might think, all I care about is yield. What do I get? How do I make the most money? I don't give a shit until they do. Of course, when something tragically happens in the market, you kind of hope you're protected. I'm wondering though, it seems like retail right now is kind of on the outs a little bit in the crypto market, and ironically, institutions are showing interest. And I'm wondering if this could be advantageous to Rocket Pool, because they might be doing their due diligence and thinking, what is the safest? What is how do we protect our investors and take a real deep dive into these things? So any thoughts on that? Perhaps this could be a kind of a new awakening for Rocket Pool in the next year or two as institutions get involved.
So that's actually really interesting that you bring that up, because that is actually something that's happening.
Pardon me. And I mean DAOs too. When I say institutions, I mean DAOs, because they're not looking to do like complex trading and all that stuff. If you're a DAO, you're doing treasury management, you just want to be conservative. How can I get all this idle ETH? Maybe I can earn a few % on it. So when I say institutions, I don't only mean like Fidelity, but I also mean, any DAOs. But go ahead.
Well, yeah, it's happening on both fronts, right? So, we literally just talked about the STAR program, which is pitching it to DAOs, crypto native companies. That's awesome. Now, on the TradFi side, there's actually like some little tidbits of information that we've gotten that if you try to string them together, connect the dots, there might be possibilities of things happening there. So the team actually met with the team from Etherealize and talked to them, and that is actually quite interesting because Etherealize have kind of branded themselves as Ethereum's institutional outreach arm, and they've gotten some token funding from the EF and from Vitalik just to give them legitimacy. And I think that the Rocket Pool team talking to them and telling them that Rocket Pool is a protocol to talk about when when you're talking about LSTs, hopefully that could go forward. And I think the team are actually reaching out to TradFi institutions as well. We heard from Langers that they reached out to Fidelity and they were talking to them. There were the Nasdaq people, like that company, they're staking with Rocket Pool. So people are becoming aware of Rocket Pool, and we just need more of that, basically.
Very good.
Yeah.
Okay, on to Halululo wrote this Reddit post that went into, you covered on your show the other day. I'm not going to read all through it, but he does a job of, he explains some of the concerns, that in the kind of looking back over the last few years where perhaps Rocket Pool could have done better. We haven't done the marketing. He summarizes it basically. If I summarize it, basically saying there are some shortcomings. There's some good things we've done, and there's other things we haven't. And it had quite a bit of reaction here on Reddit, a lot of comments, and there was also some comments on the Rocket Pool Discord as well. So do you want to just summarize for us, what was Halululo? I'm still having a hard time saying that. I apologize. What's he saying here? Is this just a negative vent, or is he just trying to kind of give us an honest view of where we're at with the protocol? What do you think?
I think so. I think that's what it is. The protocol is not thriving right now, and it's been sadly in decline for the last 2 years, pretty much. I want to say, over a year and a half now. Since Atlas, there's been a slow decline for Rocket Pool, and that's the reality, right? We can't sugarcoat that. Other protocols have declined as well. That's definitely true, but others are thriving and grown, in that time as well. So we can't, it's not quite easy enough to say that, this is a system-wide problem. That might be part of it. With the RPL price, you might be able to say it's a system-wide problem because a whole lot of ETH tokens have just taken an absolute battering against ETH, and then against Bitcoin. It's just you don't even want to look at those charts. It's just horrendous to see that, because of course ETH is down against Bitcoin as well. So there are realities, right? The ETH has not performed well this crypto cycle, objectively speaking, compared to some other tokens. Then Rocket Pool has not performed well compared to some staking services, and RPL has not performed well compared to the wider crypto market, in terms of price. And then the question you have to ask is why is this, right? And there's kind of this meme going around about Ethereum is the ETH Foundation. Ethereum Foundation doesn't care about price. They just care about their hippy dippy feelings and vibes, and wanting to have these certain values that they want Ethereum to have. But people don't care about those values, and they didn't react to that sentiment change quickly enough. Blah blah blah, all this kind of stuff, and then trying to put that Alulo's kind of painting a picture where Ethereum had problems. And then Rocket Pool actually also had similar problems in a way, in that the way that they developed over the last few years is kind of similar to the ethos and mindset of Ethereum, which is kind of funny because we've always said that Rocket Pool is the most Ethereum aligned protocol
in more ways than one.
Yeah, so we've got the bad with the good, but I thought there was some really good points that Halulu made. I don't think it was a FUD piece. I think it was just kind of reflecting on where he thought development went. People did use this as an opportunity to kind of bash Rocket Pool a little bit. Some of it was legitimate, some of it was definitely not legitimate. But sadly, that's the reality of it, right? What's really interesting is if you go back to the Discord, Langers actually read this and responded a little while later, kind of defending Rocket Pool a little bit, defending kind of trying to contextualize some of the things, and I thought that was really nice to read. And
let me read
around
why don't I read just what Langer's here? He says, he says, I'm happy to talk about any of the issues or sentiment in general. I do think Halulo is right in terms of the DAO funding. I agree that our choice to prioritize decentralization has tempered growth, but personally, I wouldn't want it any other way. We are the ones who are truly innovating. I believe that being decentralized will pay off in the long run. Additionally, over time, the barriers to competitiveness are being removed, such as scale, peg, regulation, relationships, etc. he mentions a price. He says all altcoins are down by a lot. This is not specifically an RPL thing. My bear experience is that altcoins come down fast and hard, but when overall sentiment improves, they come back with a face melting green candle. I'd love to see that someday, hopefully. TVL, TVL, the whole staking ecosystem has been retracting in the last 5 months up until very recently, where it is starting to recover. Market share, he says we have lost some market share. From what I can tell, that's because of restaking and Binance's growth. And finally, future, Saturn is big for Rocket Pool and RPL, particularly as ETH price improves, staking yields look excellent. He finishes it by saying, I've gone through a couple of bear markets, like many of you, and they feel like shit. There's always a sense of despair. I'm happy to hear what people think, but I feel that there's a lot to be hopeful for. We can always improve through the community, and we can always improve, though, and the community are already rallying around certain topics. So he kind of gives a little bit of a rebuttal there. He basically says, yeah, I feel you, but we got good things on the horizon. I guess is where how I'd summarize his response.
Yep.
You know?
So, yeah, it's just like, which side of that do you lean towards now, right? Like, do you want to try to focus on the positives and get, working towards Saturn 1, Saturn 2? Or do you kind of just want to dwell in this space of negativity, which is really easy to do right now, right? There's really really horrible everything.
Yeah, I think generally, generally, and this is, again, it's not a Rocket Pool thing. I'm not making excuses, right? But it's if you look at the CoinGecko charts, they're pretty awful for about 99% of crypto. I guess we've really leaned in the decentralization thing, permissionless thing, and I go back to when DAOs and institutions start to look, they could becoming more interested. Is that going to help? Because if we only have 1% market share, it doesn't take much to grow. If you're small, you get a few wins, and all of a sudden you've now doubled your size. Whereas if you're Lido, you're already big, you're already 30%. It's going to be it's a lot harder to double to go from 30 to 60. So being small and nimble, it doesn't take much to see some growth. Whereas if you're already big, it's hard to grow any bigger. Which mean there's growth opportunities much more on Rocket Pool side, hopefully. So
I hope so.
Me too. Finally, our last thing for the week is we haven't talked about NodeSet in a bit. They've got a new release for their software, Hyperdrive 1.1.4 has been released. Now, the big thing here is the testnet. Now, the Holeshki testnet is going to be deprecated. Joe, he writes here in the post that the execute on is over a year it would take, which is crazy. So they're going to shut not NodeSet, but Ethereum core developers are going to be shutting down the testnet and creating a new one that is called Hoodie, or let me think, where is it? Hoodie.
People are calling it Hoodie.
Hoodie.
Yeah, but it's actually named after a place in Bangalore. So if you pronounce it properly, I think the proper pronunciation is Hoodie, but everyone's just calling it Hoodie. So yeah.
What's it in Bangalore?
I think it's the name of a metro station.
Oh, that's kind of
Holeshki was named
so
of a
random.
park, right? No, they're named after places significant to Ethereum history, as far as I know.
Okay, I wonder what happened at the metro station.
I don't know. I don't know.
Well, if you're running Hyperdrive, make sure you upgrade. To become a node. The test. Yeah, if you're going to be a NodeSet operator, you have to use the testnet first to be part of the certification. So this is going to be important. So that wraps up this week. Do you have any wins for us? We haven't talked about wins in the last couple of weeks. So what do you have one for us?
I have a win. So I started doing some trading on the side, and one trade of mine.
You don't say. Really? You?
Yeah, a little bit. No, I never did it before. I started in January a little bit. I did some AI token trading. I think I mentioned it here before. And one of my tokens hit 1000x this week, which was pretty cool to see. So It's not quite 1000x in dollar terms. It's around 200x in dollar terms it was.
Is that it? Only 200x?
It was only $80. It was only an $80 investment. So I'm kicking myself that I didn't invest more at the time. But it's been fun. So that's my win. It's nice to be able to say I have a token that hit 1000x. That's pretty cool to see.
For sure. Yeah. Congratulations. Mine is just, it's a little, I like seeing the rETH discount being 0 for a little bit here. And I know we talked about it's not a permanent solution with the exit arb and everything, but I just like seeing it around almost at peg and comparable to Lido. And that's a good thing because, when we're floating around, 0.5%, 1% for days and weeks at a time, it's just not good. And now that we got the pitch deck for rETH, right, that's been created by Sleety, and we can go to these protocols. And I think consistently having a peg, right around 0 is a good thing. So that's my win for the week.
Absolutely.
Yeah.
Nice.
All right. Well, thanks for joining us, everyone. Like and subscribe. Whack and I will be back with you next week. Turn into you're going to have a show later today on Rocket Fuel. Yeah. So tune into that, and we'll see you next week.
Bye, everyone.
All right. Bye, everyone. Bye-bye.